May profits be upon you. Welcome to another weekly market forecast. We're going over U.S. oil or crude oil, light, sweet, uh, you know, light, sweet crude oil. All right. Now we're gonna look at the monthly time frame. All right. And what I like to note is the fact that we had a tremendous push down. All right. And remember that. Everybody remembers that from 2020. Then it took us a couple of years to recover, all right, in 2022 here. And then we had a retracement, and we've been moving sideways ever since for the last couple of years, all right, to today, right? And what I want you to also note is the range. This is the range it's been moving sideways in, okay? And uh, we go from one side to the other, back down to the lows, not quite up to the highs yet, but we've kind of established another range here within the range where we bunch up around here. All right, you see where it closed. Well, it hasn't closed yet. We still have 10 days. But what I want you to note is this wick here. All right, this was a wick of respect. We came down to the lows, swept this low here for sell side liquidity, and we had this bullish reaction. All right, now for me, this indicates that I'm not getting the indication that price is going to use the next candle and fill that wick. I'm thinking that we might see some more upward action. Why? One, if you look at the seasonals, up until about May, oil is usually bullish at this time of the year. That's just something to bear in mind. Not something. It doesn't determine each previous year doesn't determine the years that follow, but it's just something to keep in mind, right? Something that will kind of inform your decision making, right? All right. It also lets me know this wick that because what it accomplished, this move down swept this low, and then swept this low. All right. This is a lot of liquidity that it tapped into. For what? For a move up to the other side, at least to the highs of the range, in my opinion. All right. Now, what I look for is structure. Is there something in this wick on the lower time frames, like bullish fair value gaps, that will allow me to think, all right, price will come, if price comes down here, it'll find support for higher prices. If there's none, then I start thinking, oh, wait a minute, we might do one of these and then push up or continue down. We don't know. We don't know. So I'm going to look at the weekly, right? And what do we see? After the sweep down, after the sweep here, all right, we see this wick of respect here. We see that bullish candle follow right behind it. Now, what do we leave behind? Aha! At the high here, at this low here, we have a bearish fair value gap, a weekly bearish fair value gap. All right. And this is what price can use as it's already tapped into it with the close of last week. Was that last week? Yeah. No, wait a minute. Yeah. The close of last week. That gone, man. The market's already open. With the close of last week, I'm looking for a two candle touch and go. I'm looking for a price to push into it and then push back out if we're going to continue bearish, right? That's what I'm looking for. But when you have a bearish fair value gap, like so, after we've taken uh, a good sweep of the sell side liquidity, I'm definitely not thinking that we're going to just shoot back all the way up. I'm not thinking that at all. We have a bearish fair value gap. That is a displacement, folks, and that is something that price could use for lower prices. All right. If we go down to the daily, we have this daily fair value gap within the weekly fair value gap. So we have a couple of good reasons to think that price may want to swing down and take the sell side liquidity, these lows, and head downtown. All right. After a nice push down, we have a retracement into premium price, and we would look for price to continue this lower low, lower high, lower low situation. So I am definitely bearish right now. All right. And we'll see how the next candle fills out. Now, I'm definitely looking for price to, like I said, on the weekly, a two candle, uh, uh, you know, push in and push out. But on the daily, we might see price meddle around here for a minute before it finds its resistance, and then start to push down and sweep these lows. This is the situation I'm looking for. So I'm looking right around this area here. Right around this area here. What is that? 65, 66? Right around 66. This is I'm looking for price to find, give me a signature, a break of market structure, a pullback, so I can take a high probability trade to the downside. If it continues to go up, I'm just, I'm not interested in taking buys as price is correcting an impulsive move. This is a correction. This is the impulse. I'm looking for impulse, correction, and the new impulse. That's it. That is the science behind a lower low, lower high, lower low, lower high, lower low. That is the definition of the characteristics of a downtrend. Okay. I hope you enjoyed this video. Do make sure you hit the like button. And if you have any questions, if you have a concern, or if you see it differently, I'd love to hear from you in the comments. I want to thank you for watching, and I'll see you in the next video.